Alrighty, let's go ahead and get started. Welcome everyone to the HUBB Live Trading Room. Great to be back with you all during this trading day and during trading hours. First and foremost, as always, we do have to cover our disclosure disclaimer agreement. Main thing to take away from this is that we are not licensed investment advisors in the United States, so nothing to be taken as personal investment advice. This is always available on our website to be read in full detail at your leisure, or feel free to take a screenshot of it now if you like. That's the main point to take away. INT, INTC, or Intel rather, took the headlines yesterday with its uh, big move up on 14%, I believe. And AMD has now taken the headlines today as Sue explains what's behind the massive forecast change. And it's roaring 15% on earnings at the moment. So, very interested to hear Rob's thoughts on that and the implications that has on those sectors and in the markets. And of course, very excited to interact with you all. So let's go ahead and kick off. Rob, you out there?
Hey, I'm Zach. Hey, everyone. Welcome to the HUBB Live Trading Room, and hope you're having a great hump day, as we say every week, middle of the week. And as Zach mentioned, it's been all about tech. Yesterday with Intel, today with AMD, and I just did a presentation for a group, Synergy of Traders, and a 3-day event, so was honored to be invited to speak there. And one of the questions in the Q&A was, where do we think AMD is going from here? And the question was specifically to the fib level. So let's just jump right into that, and then I'll come back and talk about the market and what I think is currently driving the market. So when you first blush look at the chart AMD, pardon me, it didn't really look like there was a zigzag there, but we did get to 30%. And if you remember on the rules from Elliott, he really liked to see the B wave get to at least 30% to count as a correction, although the software will label it at 20 because that's the rule. B has to retrace 20% of A, gets close to that 23.6% level. So he's given it a little bit of a rounding there. Elliott, I'm talking about. But he preferred the 30%. Now that yields a 61.8% extension, which we blew right through today on their earnings. And if you attended Trade Finder yesterday, you heard me say that can AMD repeat? Somebody asked about AMD yesterday. Myself, I didn't think Intel could go higher on its earnings report after a big run. AMD was set up a little bit better, pretty nice little consolidation following its big run up, but it did as well. And since it isn't a wave three, we know that there's an opportunity for a C wave extension level. A reminder again, 61.8 was the target, but it seems like maybe 450 is in the future of AMD. I'm not sure that happens over the next few days. I think we need to do some backing and filling here with this big gap up. And let's take a look and see, since you brought it up, Zach, what Intel's doing. And if it's doing any backing and filling following its big move up. And little doji if we close here, but obviously a lot of time between now and when we close. So perhaps a little bit of pullback, backing and filling is in order, but just sideways, as AMD did, would allow the 10-day moving average to catch up. We had the tractor beam that we had talked about a week or so ago to get to 100. Well, we're above 110 now, so we'll see how these play out. And I just feel a little bit of consolidation here is healthy. Doesn't mean it's going to happen. I mean, we could just continue to go to vertical, but then the correction will probably be a bit more severe if that were to occur. Sorry, got a sneeze coming on here. Stormy day up here in the mountains. Perhaps that will wash some of this pollen out that's been driving me crazy. But on the SPY gap up today, a little bit of a blow off top, maybe. But we had the big run and we didn't get the test back to the wave three high I would have liked to have seen. We consolidated nicely though. Maybe that's all Intel and AMD do. And then we continue higher. At some point in time, we need to get a little bit of a correction, but is it sooner or later? Right now, nice consolidation, move higher, but this little bit of a gap up I think is problematic. We put the volume underlay on, and except for the this day right here at the end of April, where we did have a little more volume, we're still maintaining these peaks in volume being on lower volume. And by now, because I have given the LA wave rule that when you have an impulse wave, oftentimes it starts on lower volume, but we're already at a 53% extension, and we haven't really seen a kick up in more solid volume. There are a few days scattered in, but again, those higher days are on lower and lower volume. So, not saying that there's any end in sight. We looked at yesterday the weekly chart of the SPY. It looks like we're destined for 750 on the SPY. It's just when is it going to get there? Do we do a little bit of at least consolidation as we did there at the end of April before we move higher or not? And here's what I think is driving the last couple of days. I've been talking about bond yields and them being problematic, and also the how impressed I've been, surprised as well, that the market has been able to continue higher even as yields and rates were going up. Well, we've got over the past 2 days a move up in price and therefore down in yields, and that's helping. Um, is that other countries wanting to take advantage of our? I can give you a number of scenarios. Other countries wanting to take advantage of our higher yields. Is it the Fed in making more purchases after taking some money out of the banking system for uh, tax refunds? Are those things in play there? Or is this just a oversold bounce? So there's a lot of different reasons that we could be having this scenario. Even a possibility that there is some money that's taking gains in the equities markets and saying, okay, that's been a heck of a run up. I'm going to go park a little money in the bond market for a while. So again, multiple scenarios there on why we are getting a little bit of a tick down in yields and rates, but that is helpful to the equities market, unless that last scenario that I gave you of money coming out of equities is the reason. It's probably a combination of all those, to be honest, as far as what's causing rates to tick down a little bit. So that's the 10-year SHY is the 1.3, and so this works like TLT, prices up, yields and rates down. So with that, support for a rally. Then we get the commentary of basically the end of the war is in sight. Uh, I saw some interesting conspiracy theories thrown about on the financial networks today. The trip to China is coming up. And so is that really just President Trump wanting to downplay where we sit in the war right now before he goes to China? Because, as I'm sure you know, China gets a lot of oil from the Middle East, and it's certainly got to be affecting their economy quite a bit with higher energy prices, running down their supplies, etc. So, are we really close to the end of the conflict, or again, is President Trump talking it down a bit before he goes to China? Well, who knows? You don't know what to believe in the world of the media these days, but that's what I think is helping the market over the past couple of days. Yields have come off, and with that, you've heard me talk about this, that the crypto space as well as uh, the metals needed this. They needed some injection of liquidity. They needed yields to start to come down. And if that happens, there could be a bid. And so we have a bid in the metals today. Can that continue? A lot of room to run for gold and silver if rates continue to come down. That's going to be a key, because if rates turn around and go back up, if these are just oversold bounces, then uh, we're still going to be kind of stuck in a range there with the metals. But there you go on that bounce up on silver as well. We've had a pretty decent run on the cryptos. I'd mentioned in the past that if we could get past 40 pretty quick run to 45, or at least anticipation of a run to 45 because there was no resistance in the way. We had such a vertical fall from 45 to 40, there wasn't much to stop it from going up. Well, now we're there. So do we rest? Do we continue on a little more? There is a zigzag there, as you can see in the trying to click on that without the zigzag in there. Spread it out a bit so that I can move the arrow. But with that, are we headed towards potentially a little bit higher at that 61.8% level with the 30% correction being the target? So that's where we'll find out if there's any legs to this or just a short-lived impulsive type move. And then if we look at Ethereum, it's not performing as well as Bitcoin right now. And I gave the Oro opine yesterday during Trade Finder. Would this be a case where Bitcoin is leading now, then it pauses now that it's reached 45 and Ethereum takes off? Because Ethereum needs to get above 17 and a half. If it can get above 17 and a half, then it gets in that same window that BITB had where there's very little resistance. So it's at an area of resistance right now, as you can see from these price levels. But if it would break it with follow through, then we could be up to 20. So that covers that. Uh, Pardon me. So let's go ahead and get to the AI. And here are the signals for today. We'll take a look at the previous signals. I did close out ADI this morning, analog devices. Not going to see the full reflection here until we get the update, but pretty nice move higher on ADI. I know we're nowhere near the AI target, but you got a nice gain, and we did a June spread. It was the only way we could do a spread, and the option prices warranted a spread was to do June, which is a little shorter term than we'd like to do. Pardon me. So with that, we decided to go ahead and take the gain. We'll keep an eye on it and see if there's another entry possibility. Maybe let that 10-day moving average catch up. Again, you'll see a little higher spike once the next update occurs. And then we also have earnings report on the horizon. And you might be thinking, well, why would you be concerned about earnings? They're all crushing earnings and all the tech stocks are going up. And maybe ADI does as well. It's been a good trade, especially with Intel and AMD, to go long into the earnings report. But just remember that when you have that kind of a movement, you don't necessarily get all of the movement because some of that movement is already priced in to the move in the potential options. So if we put on the IV underlay here or the indicator, you can see that we had a nice spike in volatility. It's muted a bit because we had a spread. It works for us on the long option, against us on the shorter, but it was a 20-point wide spread. So there was still a little bit of a spread of an IV rush in there. And, you've heard me say this so many times. I'm going to take that. I view that as free money, even if we haven't hit our target. And that's just kind of a guideline that I follow. So let's go take a look at AAXJ, which is Asia X Japan, having a really nice day. That's too vertical. Not really interested in chasing that move. Look where the 10-day moving average is, all the way back down here at 110. If we could get a little bit of consolidation, maybe even a little bit of a pullback, then perhaps we could look to get back in. But for now, let's take a look at the options. And remember how I always look at May 1st, not May 1st, but the May options first right now. I should state that differently, the front month options, so it covers whatever month that we're talking about, to see that's always going to be where the greatest amount, or usually where the greatest amount of open interest is. And if you don't have a lot of open interest in the front month option, you're probably not going to have much in the following months either. And spreads are quite a bit wide. So, as you know by now, we're going to start speeding this up as we go through these each and every week because you should be getting pretty familiar with these rules that we talk about. So let's not waste any time when we know there's not really a opportunity there. VTWO is the Russell, not the IWM. This was Vanguard's version of the Russell, and you, I hopefully you could already start to say what I'm going to say about what's behind the movement in the Russell. You've heard me say so many times that there's two things that drive the Russell: risk to reward appetite, risk appetite in the markets, and interest rates. And with rates ticking down over the past 2 days, there you go. Boom, boom. It's simple as that. And the Russell will continue higher if rates continue to go down, in my opinion, because the appetite for risk is there in the markets right now. So let's see if we can find something else. Agriculture, maybe ETF. Um, Not super familiar with that. That must be what it is. And this is I like better when it comes back down. Nice 82 score. Got a little bit overbought, slightly higher than a 45-degree angle, but now back down towards that 10-day moving average. And maybe we find some support there. The problem with this is when you go over here and look at the scaling, each of those blocks is only 50 cents. So even though this looks like a normal chart and several dollars movement, it's not with each block only being 50 cents. Those are very small moves and just not something that I'm interested in. We can do smaller moves, but that's pretty small. So let's move on. There's the IWM. So there's the iShares version of the Russell chart. Looks identical to VTWO. And the one I'm wanting to get down to, well, this is interesting too. The PSI semiconductors, as you know, have been on fire. And nice little zigzag there. Let's see if that actually counts right here as a potential zigzag pattern. Right. Yeah, right to 38.2. And that gives us the target price where we are right now, 61.8. So maybe a little bit of a doji forming. We'll see how the semis close today. If we have a doji, then we got to wait and see. But at this point, bring up the DMI. That looks like something that may want to continue. Yeah, look at that DMI. Um, Perhaps we just pause here a little bit from the 10-day moving average. It looks like the semis want to continue higher. It looks like that wants to go up to 160. Number of different semiconductor symbols we could look at. Let's see what the options look like on this one. Invesco, I'm very good. So a little different story on the SMH. We can look at that. Should be the same chart and more liquid. Yep. Identical chart, more liquidity there. Yeah, what you would expect. And as a reminder, as soon as you see that W, when you're looking at options and talk about looking at the front month options for a view of the open interest, but as soon as you see that W, meaning that it has weekly options, you already know that it's going to have good liquidity. They don't create weekly options and options that have no liquidity. So semiconductors look pretty interesting right now. And I want to get to Logitech since we're staying in the tech space and maybe an opportunity here where we pulled back today, where we had this thin triangle, and boy, it took a while to break out. That triangle got quite extended, And then remember how I always talk about there's three ways triangles can break out. This isn't really AI based, but it's trading based. That the triangles can break out and run. They break out, test the breakout point, and then go, which is in the case here in Logitech. Or you get a false breakout where it gives you a head fake one direction and the big move is the other. This is clearly the second scenario where we broke out, tested the breakout, continued higher, pulled back a little bit. This one looks, let's see what the DMI looks like here. That's why, because the ADX isn't high enough yet, and that set up the stage for the pullback today. So I'm okay if the DMI looks like it's setting up, or if we get a little tick down in the positive directional indicator when you have a pullback day. But gosh, you really want to see a little more strength being evident by the ADX. Remember, the ADX is lagging. And that's why we look at the CCI. So we'll look at that real quick. And that's not the direction that you want it to go. Um, so maybe we need to just pause here on Logitech, um, figure out when the next earnings cycle is. Sometimes they don't publish that stuff, but if they do, the software platform has it. No, you've looked at that. So um, keep an eye on that one. A little disappointed. Thought we might be able to have something going there. And I see the IBIT on the list, so we'll look at that one as well. Remember, I'll look at anything above 70, even though the guideline is 75. So 73 is going to be gray. It's kind of neutral or not as strong. And put the moving averages back on. Synaptics, ooh, earnings tomorrow. So a little bit overbought going into earnings. It's been hit or miss. You've had huge winners on earnings, even though, again, a lot of these volatile moves are priced in. So even though some of them look like, oh gosh, I missed a massive move on AMD. Well, you missed a move on AMD, or we did, but not as much as it appears, because as soon as that liquidity comes out, which it does before the market opens, then they've already pumped in liquidity ahead of it with the expectation that you're going to get a move. And one way to negate that a little bit is to do a spread if you're open to spreads. But if you're just buying straight calls, then that really matters with what happens with the liquidity. Let's look at IBIT real quick. Um, so this is the iShares Bitcoin ETF. And I know a lot of people like this. A lot of people like this better than they do BITB. Here's the reason why I show BITB. So we bring up the option chain on IBIT. You'll be able to see that it has weekly options. And I'm not a fan of trading cryptos on a shorter term basis. They're so volatile, even though they haven't been over the last few months, or you could argue they haven't been that volatile this year. But historically, they have been. And I just don't want to encourage anyone to get caught up in trading weekly options with the amount of time decay that occurs with currencies. You're feeling right now the effects of time decay in the weekly options, not this past week, but before, and then like through this area here back in February and March and early April. Time decay would have been eating you up in a weekly option. So same chart. I just prefer the BITB. Might be potential trade here. We did have a C wave extension on BITB a little bit further. Let's move on. Let's see what CNO is. It's close enough. It's going to be rounded down. Well, it is interesting that we look at this with the financials. Perhaps, just perhaps, if interest rates continue down, we could see a continuing bid here. So anything in the financial area, if that's a big if, rates continue to tick down, should start outperforming. They should start moving, and everything pretty much moves up when the market moves up like it has. But this could be a place for an outsized run if, again, if the interest rates keep coming down. So if you want to trade in the financial space, please keep an eye on interest rates. Let's go back to the 4th, and we sent out an alert on FTNT. Um, looking at It's funny how the earnings reports seem to be right where that little scaling is. Um, so um, we'll see how Fortinet does um, with their earnings and where we can go from here. I believe it's after hours.
Well, Rob, you still out there? It appears he is not. I thought for a second he was just pausing to review some data or perhaps quote prices that he was looking at, but it appears he dropped in connection. He did say there was a storm there where he's at today, so let me see if I can get in contact with him to see if he's going to rejoin the session, and I'll keep everyone posted. So thank you in advance for your understanding. Rob just confirmed with me that he's not going to be able to get the connection restored, unfortunately. I guess major disconnection outage just happened in the area he's in. So, unfortunately, we're going to have to wrap up the session at that point. If there is anything that's time sensitive or anything that you want Rob's thoughts on in general, please feel free to submit a ticket into support at support@uotrader.com. I'm sure everyone is familiar at this stage, but I'll send it in just in case to the chat along with support at Hub, and I will escalate it to Rob if you would like his thoughts, or if it's anything I can assist with, I'll obviously respond as well. Or also feel encouraged to attend the insiders meeting tomorrow night at 8 p.m. and ask your question there if you like or prefer that method. Maria, I'll have to look into why you don't have that alert, and then I'll be able to send you a detailed response via support. So I will be sure to follow up with you regarding that here shortly. And again, thank you everyone for your patience and understanding. Sorry for the unexpected inconvenience, and we look forward to seeing you all next time. So take care.